Good morning, ladies and gentlemen. This is David Bryant speaking. Today's very brief presentation provides information for a unit holder meeting to be held on the 14th of April. The meeting has been convened to approve an increase to the RFF guarantee provided to JNF Australia. First, some history. In August 2018, RFF raised equity to acquire 5 feedlots from JBS Australia for $53 million. The location and carrying capacity of these feedlots is set out in the map on this page of the presentation. The capital raising also included $75 million specifically to guarantee a cattle supply facility for the cattle which are held primarily in these feedlots. Then on the 10th of August 2018, unit holders approved the structural arrangements for the guarantee, which are noted in the diagram at the right. As illustrated, the guarantee is provided to a subsidiary of RFM called J&F. The $75 million guarantee allows J&F to provide the cattle supply facility using $250 million of bank borrowings. The transaction's been structured in this way to ensure that RFF continues to earn only passive income and thereby maintain its REIT classification. While RFM is the owner and manager of J&F, it receives no remuneration or profit other than an amount limited to 1.05% of the guarantee. Due to the growth in JBS's business, JBS have requested an increase to the cattle supply facility. Both banks who provide the existing debt facility have agreed to increase their funding on the basis that the guarantee increases proportionately. The resolution before members seeks approval to increase the guarantee from $75 million to $100 million. Once passed, this will allow J&F to utilise bank debt to provide a cattle supply facility of up to $333 million. It should be noted that initially the guarantee will only increase by $7.5 million, with a total increase in the supply facility limited to $25 million. As JBS's needs grow, the approval of the resolution before members will enable the facility to grow in unison without us having to return for a further unit holder meeting. Consistent with RFF's other lease arrangements, the guarantee has no direct operating risk and is supported by a high-quality counterpart. JBS Australia and their international parent, JBS SA, are the largest meat processor both domestically and globally. Other highlights are included in the table on the right-hand side of this slide. Details regarding the group are provided in the table, including the fact that globally JBS SA employ 300,000 people and have a market capitalisation of $15.5 billion. Counterpart performance is guaranteed by Baybrick Proprietary Limited, an Australian entity with $3.5 billion of net assets, and they are a wholly owned subsidiary of JBS SA. While RFF has no exposure to the production and market risks typical of operating businesses, there is a limited exposure to the risk of cattle mortalities. JBS perform the day-to-day management of the feedlots and are responsible for mortalities of up to 15%. RFM has in place insurance for additional mortalities greater than this level. Mortality risk is very low because it is reduced through the geographic diversification of the feedlots, the fact that feedlot mortalities are typically around only 1%, and because the cattle typically pass through the feedlot within 100 days. Finally, it should be noted that the guarantee has a distinct and strict limit. RFF has paid a return on the guarantee that it supplies to J&F. The table at left shows the return for the guarantee as recorded in the audited FY19 financial statements. The income paid from J&F totalled $3.8 million for the period. The second row of the table shows an interest saving for FY19 of $2.7 million. This saving occurs because $75 million of equity was raised and used to pay down debt. As the guarantee was in place for 8.5 months, we've presented the annualised return, which equals 10.2%. An independent expert has assessed the guarantee will earn a return between 9.7 and 11.2%. This represents a very good cash return on investment for RFF, particularly given the quality of the counterpart. The chart on this next page provides the past performance of RFF and demonstrates the steady growth in key drivers of fund returns. Since listing, RFF has grown its net assets per unit by 10.2% per annum. AFF per unit has grown by 8.2% per annum, and distributions per unit have grown by 4% per annum. This chart also affirms previous forecasts for the performance of RFF. That is, AFF per unit will be 13.5 cents per unit this year, and distributions will grow next year by 4%. Before concluding this presentation, I'll use this slide to highlight two important attributes of the RFF portfolio of farms. Firstly, these farms produce plenty of food and there is more coming. Harvest of summer crops on these farms is in full swing, with crops now entering our lessees' processing facilities, and those crops are being bagged for delivery to your supermarket. As usual, there is way more than we Australians can eat or hoard, so food is also being delivered to our export markets. Notably, exports to China have normalised, with shipping containers now being unloaded and flowing through to Chinese consumers seeking our high-quality produce. The second item to note is that our lessees are primarily large corporations whose food businesses incentivise them to commit to long leases that secure food supply for their businesses and secure predictable and stable income streams for RFF unit holders. In conclusion, the feedlots and guarantee are attractive rental stream investments that continue to perform to our expectations. Due to increased demand for Australian beef, JBS are seeking to increase production, funded through an increase to our existing cattle supply facility. This requires an increase in the guarantee and will increase returns paid to RFF. I commend this initiative to you, and I am confident that RFF unit holders will agree that this incremental increase supporting quality Australian food production is a simple and sensible investment decision. This concludes today's presentation, and I'd now like to invite questions from you via the online system. We have a question there, which is what is the security that is being supplied for the guarantee? The security is both the cattle held in the feedlots and also the guarantee from Baybrick Proprietary Limited, a $3.5 billion company. We had another question, which was that should the independent expert review be revised given the changes in currency and movements in financial markets since the report was done? We can't see any reason why that would be required. We think that the finding of fair and reasonable would be unchanged, and the inputs into the modelling wouldn't alter dramatically either. So that we don't expect that is required. But thanks for the question anyway. There's a practical question, which is how will the meeting be convened given COVID restrictions? The meeting will proceed, and the ability to vote via proxy is there for everyone, and we would urge you to utilise that ability. Another question, which is a very timely one: will your cash flow be affected by the economic slowdown underway? We have a weighted average lease expiry of around 11 years. So we have leases on average that are going to run for the next 11 years, and let's hope the crisis doesn't last that long. Will our lessees continue to perform on those leases? I suppose it's just worth noting that our lessees are producing food which, regardless of the various restrictions that will be placed on all of our lifestyles, however temporarily, that food will still be required even once the current mania for hoarding passes. The duration of the recession that we are most likely to have it could possibly affect food prices, but we would expect that our lessees' businesses will remain very profitable, and the leases and their contractual commitments will be honoured in full. Another question, which is, what function do Baybrick perform for RFF? Baybrick is simply a subsidiary of JBS SA. It's part of the JBS Australian group of companies, and it holds most of the assets of the Australian business, and the function that it performs is it provides the guarantee for the performance of JBS under the facility, and that is a very substantial guarantee given the $3.5 billion of net assets in that business. Thank you all very much, everybody, for attending today. I think that's about all of the questions. So I think we'll wind up now, and if you have any other further questions, please contact our investor services, and we'd look forward to answering those. Otherwise, we look forward to meeting with you again when we next brief you on our financial results, which are continuing to be very pleasing. Thanks once again.